Hello friends, on 10th of September I had published a bullish video on Beam Therapeutics. Today I'm going to revisit Beam again because the market seems so dicey, and I thought how does Beam Therapeutics look now given that the markets are so choppy and red. Let's get started. Welcome back, friends. While Beam was front and center in the last week as far as my mind space was concerned, Beam Therapeutics also announced new preclinical data demonstrating the potential of the company's multiplex base editing approach to both reduce viral markers for hepatitis B surface antigen expression and also the ability to prevent viral rebound of hepatitis B virus in vivo models. I'm going to refer to hepatitis B viruses as HBV just for my convenience going forward. Currently available treatments can limit HBV replications, but they do not inactivate these HBV genomic elements, which can lead to reinfection and reactivation of the HBV virus when the opportunity presents itself. This inability to prevent HBV infection rebound is a key challenge to curing HBV when a therapy is considered. This is a very, very hardy virus, and it seems it can live outside the human body and remain infectious for at least 7 days. As per Beam Therapeutics, Beam base editors are designed to enable direct and irreversible conversion of a specific DNA base into another without inducing double-stranded breaks. And the irreversibleness here is basically irreversibleness in nature, but it can be reversed by doing another base edit. So that's what we have to keep in mind. And in hepatitis B virus infected cells, cytosine base editors can target both integrated HBV DNA and the CCC DNA mini chromosome at multiple locations, introducing precise and permanent stop codons in the viral genome. These stop codons are intended to silence the viral genes without the risk of chromosomal rearrangements that can arise when nuclease editing systems that create double-stranded breaks in DNA are used. So, for example, when I'm editing a video, if I was to properly terminate a particular segment by using proper words and proper tone of voice, and then start the next segment, when I put them together, it sounds seamless. The same way, the stop codons are the punctuations which tell the DNA that that's the point where the expression ends. And that's what is the benefit of having a stop codon rather than have a double-strand break in order to terminate a gene sequence. If successful in vivo, I think it could mean a cure for chronic hepatitis B infection, which is currently a major problem globally. There are some restrictions even on surgeons with hepatitis B from operating on patients. And also there are some restrictions on patients with hepatitis B before getting operated. For example, before elective operations, particularly orthopedic surgery, national guidelines in Germany recommend testing for human immunodeficiency virus, that is the HIV virus, and the hepatitis B virus and hepatitis C viruses to reduce the risk of transmission of the virus through needle stick or cutting injury to the operating staff. Considering the magnitude of the problem, here is the data released from Beam based on their in vivo on mouse models, and it seems quite promising. Base editing treatment led to sustained reduction of HBsAg observed in both LNP dose groups compared to control mice in which no meaningful reductions were observed. Base editing treatment led to sustained reduction in serum HBV DNA with no HBV viral rebound observed compared to control mice group in which serum HBV DNA was reduced following administration but rebounded after treatment was discontinued. Taken together, these findings demonstrate the base editing has the potential to permanently inactivate CCC DNA and integrated HBV DNA by reducing mutations that prevent HBV replications and silence viral protein expression. This data was released 3 days ago on September 19 morning, and I think basically it shows a very promising development, but still the stock fell on that day from 56.29 to 53.78, which was pretty big. It stabilized the next day in a very, very narrow range of 53.03 and 53.65, but dropped significantly on 21st. And today it has dropped already to 49.08 at the time of recording. I think that for the next few days, nothing is going to matter much as people become risk averse and central banks continue to mop up liquidity and raise interest rates. This is not a great time to be a genomics investor, especially if we don't have fresh capital to dollar cost average. That is my frustration right now. And even if one were to consider which asset to liquidate so that they can put more funds into stocks, the difficult financial environment, along with the inherent risk for genomic companies with short cash runways, gets amplified, and it is still not clear that buying now will turn into a dollar cost averaging opportunity, or will it end up being a case of catching a falling knife. Now, for clues, let us look at QQQ and see how far the QQQ can fall in percentage terms, and then extrapolate that to Beam Therapeutics and see how much more Beam Therapeutics stock price can fall. Let's go into the TradingView environment. Friends, here we are in the TradingView platform. I'm looking at QQQ, and I have the bear channel out here for QQQ. Remember, each of these candles is a one-day candle. And if you look at today's candle, which is out here, again, still there is a lot of indecision out there. It's around 10:15 a.m. in the morning. And you can see that we have a support at 278.43, and we have this resistance here at 286.35. This is a huge range. And right now we are bang in the middle and moving downwards since the open. MACD is bearish and the momentum is also below average and falling down. We have dropped 0.78% since the market opened. And if we look at the long-term view of the QQQ with the same time frame, you can see that we could go as low as 178.49, where we were on the 27th of March 2020. So that much is definitely possible, and it could be on the cards. We don't know. But if we look at our bear channel out here, I think we have got a whole range of supports coming up. But if we follow even if we had a sharp fall, then that is the scenario where we would end up at 211.67. So there's a whole range of possibilities from 211.67 all the way to where we are right now at 280.45. So our first support is going to be at 278.43, and the next one is going to be at 273.52, and the one after that is going to be at 268.74. So now I'm going to roll back, and I'm going to take a measuring widget, and I'll take today's price, which is right now at 281.85. So let me take my cursor to 81.87 just and then I'm going to pull it down to the next level of resistance, which is 273.59, and that would represent a fall of 2.94%. Now let me roll this up a little bit so that we can go down further. And now I'm going to take the widget once again, and I'm going to start from where we are right now, and I'm going to let it fall through 3 levels of support and reach 260.08. And if that happened, that would mean, that would mean we fall 7.83%. Now, if I go back to genomics and look at Beam Therapeutics and take a 6% drop from where we are right now, which is somewhere out here, and go for a 6% drop, that would be somewhere around 45.50. And right now we are at 49. So another $4 drop is still on the cards for us if we compare with QQQ, which kind of matches to a good extent with 45.87, which is where we have our minor line of resistance. And we still have a bearish MACD for Beam Therapeutics, and we still have a falling momentum. And each of these candle again is a one-day candle. So we today after the market open, we have fallen 4.71% already. So it's not looking that good for Beam right now. And then that brings me back to the question whether this is a dollar cost averaging opportunity, or are we going to be catching a falling knife? The expression catching a falling knife means that we continue buying at lower and lower prices of the share, assuming that a rebound is nearby, and that we are reducing the average cost of our stock holding And in the process, we exhaust our available capital and we can't buy anymore. And the stock still continues falling. So that's what I mean by dollar cost averaging versus catching a falling knife. Catching a falling knife is when the stock price keeps on falling and you deplete all your capital that you have by buying more and more of the share and averaging down the cost of your holdings. So given the indecision of whether it's going to be dollar cost averaging or it's going to be a case of catching a falling knife, I'm going to sit out on the market right now. I'm not going to make any moves on either Beam or CRISPR or Bluebird, just staying put. I'm going to watch for the next few days and see if there is any positive movement at all. And there are also these geopolitical flares that are coming up. Russia is doubling down, and it's already formally started talking about using all options in its disposal, which includes nuclear weapons. And US is warning them against it. So that's another problem that might push down the market further. And right now, most of the market participants, at least in the US, are digesting the news delivered by the Fed yesterday. And there will be a lot of economists and a lot of experts who will be putting forward that thesis. Some of them are likely to be bullish, some of them are likely to be bearish. And when the market catches fancy and finds one of those theses to be more appealing and logical, the market will follow that direction. And if that thesis is bullish, we're going to see a turnaround in the market in the short term, because we are still in a bull channel. Any rally is going to be short-lived. But if the thesis happens to be bearish, then we are likely to test all the supports that I showed you in QQQ. With that, my friends, I think I would like to finish this video out here. Today, I would like to invite all of our viewers to put your comments below because I'm finding it very difficult to make any sense of this market other than the fact that there is extreme fear and extreme pessimism, and that the tightening in the market with increasing interest rates and quantitative tightening is spooking people and making them risk off. And genomic shares being more risk on shares, they are feeling a brunt of this market environment. And that's why the share prices are going down. I don't have an idea of how low it will fall. And today I'm genuinely inviting all of you to put some comments in here and let me have an understanding of how you view this market. Share your wisdom with the community. That's what I would request. And friends, if you like this video, please press a like out there, because while this market continues its downward spiral, I'm going to use my time to do something positive. That is to get this channel to reach 1,000 subscriber level. And I would look forward to your cooperation, because this is something that we have in our control. So if you have not yet subscribed, please subscribe and help us reach the 1,000. That will be an oasis of happiness in between this market of red and dread. Thanks, my friends. Bye for now.